So I am thrilled here to do a little bit of a wrap. I'm going to invite Min Liu, Stephen Snyder, and Gilad Bernstein to come on camera. Good to see you all. So thanks for joining here. I know you tuned in for some, maybe not all. So, but we'll get a kind of a good balanced perspective on what you liked, what you didn't like. Maybe Stephen, I'll start off with you. I think this is your third year, not only of commenting and helping ask questions to startups, but sponsoring the global startup pitch. So appreciate that. Maybe you can reflect a little bit on your time here with global startup pitch and also some of the startups that you saw today.
Yeah. Is it possible for them all to win? I've genuinely been so impressed by the caliber of startups that are in the competition this year. I think it's a really interesting time in VC globally, and especially in the travel industry. I think the pressure toward profitability and actually having a pathway to profitability and a pathway to exits, it's just part of the conversation that I've heard so much about lately that maybe I didn't hear about a year or two ago. So for the founders that are out there, I would encourage you to think on multiple time horizons at the same time. I don't know that the days of growth are of growth at all costs are still there. So it's an interesting environment to be in right now, and I just tip my cap to these founders. I'm so impressed.
Yeah, it was a really good group. I think polished. We heard lots of great comments from the judges that the startups were very well prepared. So I've got a question for you, maybe Gilad and Min. What do you both look for? What's the first thing that you look for when you're kind of listening to the companies, when you're scouring through them? What's that first thing that always jumps out? Min, maybe I'll start with you and then we'll throw it over to Gilad.
Yeah, sure. I think the first thing I have in mind is really to look at the scalability of the business and the growth potential. But at the end of the day, only scalable enough platform can be transacted at attractive valuation later on. So path to profitability, when you can reach your break-even point, when your cash EBITDA margin profile can reach 15%, 25% mark, that is very, very important.
That makes sense coming from you because you help startups exit. That's what you do at Cambon Partners. So Gilad, how about you? You're a early stage investor. What do you go to first?
Yeah, absolutely. And it's not that different from what Min just said. I think a lot about how much the founders have thought about distribution and sales and marketing. And I think about that because I made that mistake with all of my first startups, where I was purely focused on product and how great the product was going to be and spent very little time on distribution. So I really look for founders who've spent almost as much time or even more time on distribution as they have on the product. And I'll just add on the AI side, it's really all about moats. At the end of the day, AI is so easy to integrate these days. That's why I call it the great commoditization. So it's like when I look at a lot of these AI startups, my first question is like, what's protecting you into building this into a larger business?
That's great. So today we saw a lot of different types of startups, and obviously there's still lots of problems in our industry that still need to be solved. So we saw some different takes on trip planning, which is a category, Gilad, that you know quite a bit about. We saw some digitization of tours and curated trips. We saw private air charters, optimizing air cargo, some ESG opportunities, hotel tech platforms, a couple of fintech plays. So what areas, maybe, Stephen, do you see as kind of the biggest opportunities today?
Yeah, I feel if you compare this year to other years, sustainability perhaps is not as visible in many of the startups, which maybe one could be a good thing in that folks are tamping down on greenwashing and people are being honest about what they're putting forward and not going out of their way to call it ESG. Maybe doing that with AI instead this year, instead of ESG. But regardless, it is a bit of a capital winter right now when it comes to sustainability. I'm hoping that we can see it through to the other side on this because it's so important that we get to this. But I think that's reflective of the long timeline that's required on some of these verticals. So you'll see the fluctuations here. AI, maybe we're beginning to get into AI autumn, and some of the ones that are not ready to last through the winter are starting to shake themselves out. And that's good. It's cycles moving themselves forward.
Gilad, anything to add there?
I mean, I totally agree. One of the things that we saw a little bit of, and I'd love to see more of, is back of house utilization of AI. It's one of those things where understandably most founders are focused on inspiration, booking, planning, like a lot of these front of house things. But as we all know, labor shortages are still a thing, wage increases are still a thing. There's all these issues in the back of the house. So I think there's a lot of opportunity there.
Min?
Yeah, totally agree on both comments. And I think today we see a lot of presentations in the experience space, in digitizing tourism packages, in hotel tech space, and also I think this coincides with what we do currently as deals on the market. We do a lot of those kind of deals today. I would expect to see a lot of more maybe AI-powered backend technology solutions going forward. But yeah, hope this will come soon.
Yeah, so that kind of leads into the next question. Like so you mentioned some AI, kind of AI back office, which is maybe not the most sexy stuff to present on the global startup pitch, but it's maybe where the best opportunities, at least right now, for real true AI use cases. So Gilad, was there something that you expected to see today that you didn't see?
Yeah, absolutely. And I'll just add one more thought to what you said, which is back of house is also often easier to measure. If you're at the top of the funnel, unless you're a V conversion platform, it's really hard to do attribution. In the back of the house, it's much easier to measure, which means you can get paid more easily, which of course startups all need. But in terms of your question about what I didn't see that I expected to is computer vision. I say this a lot, our industry lives in physical space. And I'm surprised that we don't see more startups that are using computer vision, both in front and back of house, to optimize that. So that was one.
Stephen?
Yeah, I agree on computer vision. One of the biggest successes in our portfolio right now is a company called Asaya, which is using computer vision for turn management at airports. But I think it doesn't have to be vision alone. Let's talk about the five senses of computers more broadly, because I've been hearing about, I suppose you could say, audio related ones. And a shout out to Autio, which did a fantastic job today in its pitch. The one that we are looking for, that we are trying to manifest out there, is the Shazam for smells, because there's a lot of industrial use cases for that pertain to us as the airline. So I was pleasantly surprised not to see as much on the gen side of AI. It seems like maybe we're progressing beyond that stage of gen for the sake of gen. But I fully agree, these back of house use cases, these use cases where we are applying AI to something that could be sensed in the real world, I look forward to seeing more and more of that.
Great. So Gilad, last week you shared, actually it was maybe 5 days ago at your tech summit at Virtuoso, you shared some of your key travel tech trends that you're watching in 2024. So you categorized them into 3 different themes: connected systems, which we saw a little bit of today, new monetization models, and AI maturation. So which one of these 3 themes are you most bullish on? And how do you see that playing out in the next 1, 3, maybe 5 years?
Yeah, and each of them is a little bit different, right? So if we think about AI, I'm the most bullish on the speed at which we'll continue to see AI rolled out. Now, I completely agree with what Steven said about entering the fall. And this is what I talk about all the time. It's really hard to invest in AI startups right now because we're all using the same models. And startups, by definition, have relatively little proprietary content or data. And thus, we're going to continue to see it move. But I have serious concerns about the viability of some of these guys becoming very large companies that, frankly, I would want to be an investor in. But we're going to continue to see lots and lots of adoption integration because it's the great commoditization and anyone can use it. In terms of fintech, that's going to be really easy to measure because this is really all about revenue and margin for these companies. But this is actually something that's going to largely happen outside the startup ecosystem. There are some startups like Unravel and others that are doing really interesting things in the space, but a lot of the big guys are building in-house and building it themselves. So I think this is going to continue to go, but probably maybe have slightly fewer winners in the startup ecosystem. And then the connected trip's the holy grail, right? I mean, we've all talked about it for years, and I don't need to give examples because everyone on this Zoom knows exactly the pain points that we have due to lack of the connected trip. But as I say all the time, this is not a technology issue. This is a business and culture issue. It's how do we get companies that are sometimes competitors and sometimes partners to agree to share data for the benefit of the traveler. So it's the holy grail, but unfortunately, the one that I'm least optimistic about in kind of the 1 or 3 year time frame.
Yeah, it's too bad because that has maybe the most potential to really.
And it is the rising tide that lifts all of us
Yeah.
up, but it is hard from a business perspective.
Yeah, for sure. So Min, it looks like we might be ending this high interest rate environment, at least in the Western market. So how is the environment for M&A right now? Did you maybe? I think we expected to see some more deals occur in 24, but kind of where do you stand there, and what are you looking at for the next maybe 6 to 9 months?
Yeah, a good question. I think looking at the first half of this year, we clearly see improved M&A environment globally, in US, in Europe particularly, but maybe less so in Asia. So with total deal value increasing by more than 20% in Europe, for instance. And clearly technology M&A is driving this trend. So in the travel space, for instance, our database, the bank.travel, registered 322 deals year to date to up to 15 August today, compared to 300 last year. So we are really in a good pace. So 2024 is shaping up to maybe a better year than 2023.
Okay, great. Stephen, let's talk a little bit about sustainability tech. So you mentioned it before. The horizon to maybe scaling profitability in that category is a little bit challenging, and that makes investing in that category maybe a little more of a longer term play. So can you talk about, JetBlue Ventures has invested in a few sustainability initiatives. Can you talk about your perspective around investing in sustainability tech?
Yeah, it's a really interesting time in sustainability, just because we do have to see through to these 2040 or 2050 targets that a lot of airlines have put out there in particular, but all kinds of travel providers. I thought it was interesting. Air New Zealand has had so much leadership in this space, and I suppose they led as well in pushing back their deadline for net zero for the first time, their first major airline to do that. Originally, they were trying for 2030. I believe they've revised it to 35. But I think it's a bullet that a lot of airlines are going to need to swallow, and are going to have to figure out just where do we land the plane on this. A lot of our investments are on a 7 to 10 year time horizon that are in this area. So I don't think that there's concern. I don't think that there's any fright on our side. I think fortunately we were able to allocate what we wanted to allocate within our portfolio during an earlier season, but this is certainly, we've not seen as many new opportunities emerging recently. So hopefully it means it's a shaking out for the ones that aren't going to be viable in the long run. But yeah, it's definitely been an interesting year.
So let's, Min, you mentioned M&A picking up a little bit. Let's talk a little bit about fundraising. So a few trends from Phocuswright's State of Travel Startups data. So funding, as we know, certainly hasn't fully recovered. We're pacing right now to potentially match 2023 levels, which was the lowest since 2014. And for the first time this year, which I think is interesting, B2B funding has surpassed B2C funding. Obviously taking out some of the big funding rounds that Uber and others secured. So let's start with Gilad and Stephen on the investor side. Have valuations fully normalized, or are founders, still somewhat unwilling to face the market realities? And is this the largest barrier that we're facing right now to kind of funding, freeing back up?
Yeah, I mean, from my vantage point, I don't know if it's all the way back to normal, but it is certainly way off the peaks that we were seeing a couple of years ago. I have seen some investors in our space going really low with valuations. I've had some founders come to me being like, "You think this is reasonable?" And sometimes I actually think the investors are pushing it even further down. But I will say, for everyone in the ecosystem, healthy prices is good for all of us. Not both as investors and as founders, none of us want valuations that can't be sustained for the company's growth. At some point, a valuation will reach reality based on revenue of the company. So at the end of the day, while it's slowed down, I actually think it's really healthy for all of us in the ecosystem.
Steven?
Yeah, on the B2C side, I think this has been a great year for the giants. I think it's been a great year for the big guys. And I think it was in iWander's slides toward the end today that they were showing the booking flow going back to Google when you don't know where else to go. They've got such a massive advantage when it comes to AI and the partnerships that they've been able to put together. Not exactly the way that they might have envisioned. It's not necessarily itinerary oriented, planning oriented, as Gilad, I'm sure, could round out for everybody. So I think that's quite challenged. We are not 10 years ago anymore where you can just tell a consumer to download another app and expect them to follow through and use that as their home for the trip. People want to be in environments that they're familiar with. The drawback on the B2B side, particularly within the travel industry, is it's very long sales cycles. And you have to be selling to each other within the startup or early stage ecosystem in order to actually have traction. I'll just close quickly on valuations. I would want to see more volume before I know that we have plateaued somewhere. It's so sparse right now, what kind of deals are getting done, that it's difficult to establish a trend quite yet.
Yeah. Okay, good. So I'm going to transition to a virtual speed round here. So the format is I'm going to throw out a word or short phrase and respond as concisely as you can with either one word or a short sentence. So Gilad, I'm going to start with you. AI-driven trip inspiration startups.
So I'm going to copy my friend Nadav Gore, excuse me, who said, just because they're easier to build does not mean the business model is any more viable.
Stephen, B2C or B2B?
Better know your customer. Whether it's another business and you have to hire a VP that came from that business, or consumers and you got to really know the customer.
Min, valuations.
Be realistic. Yeah, I think just coming back to the previous conversation, I just want to add a few things on that one. I think existing founders are still very, they still want to see high valuation.
Of course they do.
for good businesses, of course, and for investing founders, don't forget that you are also investors. So you need to strike the right balance. And then
that's a great point.
There are a few mechanisms that can help you strike your valuation expectation. For instance, earnouts based on performance. So be realistic and invest in your business, and you will get better valuation.
Gilad, luxury travel.
Booming.
Stephen, airline tech startups.
Beware walled gardens.
Min, hospitality tech roll-ups.
Long for it.
Gilad, growth at all costs versus cash flow positive. This one's kind of easy.
Yeah, no, we're in cash flow eras.
Stephen, sustainability startups.
Yes, still go for it. Go for it.
I love it. Min, fintech startups.
I don't know what to say, but it's a good space, and need to be very fragile.
Gilad, U-Trip or nicer?
Oh my God, that's hard, but I have to say U-Trip. Come on.
Yeah, you have to. Stephen, Flyer or I6?
All of the above.
Come on. Min, Travelsoft or D-Edge?
Both.
You guys are no fun. All right, I want to, so we've got just a couple of minutes left. I want you to give one piece of advice. I'll just keep it, kind of open-ended. So Stephen, why don't we start with you? We saw some, really great stuff today. What's one piece of advice that you've got for earlier stage startups?
Yeah, especially if it's B2B, it is okay to ask, what is the business case process? What KPIs do you care about? You have to think like your customer, so that way you can help them put their best case forward.
Great, Gilad.
I'll take a similar answer on the fundraising side. When you're talking to an angel, if you've had 3 conversations, you have every right to ask where they are in a decision.
Min,
No, I agree with both.
any advice that you have? How about if, when should a startup start planning their exit strategy?
As soon as possible. So the thing is that when you think about exit strategy, the possibility is that you won't exit at once. So you need to increasingly increase your valuation and add value through the road. So you need to think about this. What kind of strategy you need to put in place to increase your business attractiveness, and whether you need to grow organically or to do consolidation, and then attract minority investors. So you just sell a very small stake first, and then maybe get a big cash out later on. So you should plan it at a very early stage. No one will buy a company if you exit completely at once for the first time.
Yeah. Any last words, Gilad or Stephen?
I'd say from a founder's perspective on that, it's just going to take longer than you think. I have never heard of an M&A process taking as much time as people at the beginning of the process thought it was going to take. So watch your cash, watch your burn, make sure you have enough time to make it through the process.
Stephen, any last words?
I'm just so impressed by everyone and so impressed by Phocuswright for putting this on. So thank you so much.
Appreciate that. So thank you all. So I'm going to have you turn off your cameras, and I'm going to take us to the winner announcement. So of course, thanks again to all of our judges. We really couldn't do this without you. We gave you a big master list of startups to start the process, and you helped us whittle down to the amazing startups that we saw today. And then you helped us today, select the winners. So as Kimberly and Suhoon mentioned at the opening, we will welcome 5 Seedup and 5 Scaleup finalists to an in-person showcase at WIT Singapore this October from the 14th to the 16th at Marina Bay Sands. And we hope you'll all come out and help us celebrate the next generation of travel. 2 People's Choice winners will be selected in Singapore to move on to the Phocuswright Conference in Phoenix, Arizona this November from the 19th to the 21st, where we'll dig into the new agents. So, of course, none of this would be possible without the support of JetBlue Ventures. So thanks, Stephen and the JetBlue Ventures team. We know that you're committed to the bright minds and creative spirits of our innovators. So thank you for the ongoing partnership. And now it's time to announce the winners. In the Asia Pacific region, first winner, Seedup category, Jeff Pan, the founder of Belli. Jeff, well done. So I'm going to have Jeff, I love that, but we're going to have everybody come on screen after we finish announcing all the winners. So thanks for that initial celebration. I'll have you pop on in a little bit. The Scaleup category, Francois Chabadi from Neoma. Francois, congratulations. Seedup winner, emerging markets, Christina Melsova from atlaseek. Well done, Christina. Scaleup winner, emerging market, Paul Malicki from Flapper. Well done, Paul. Next category, Seedup winner in Europe, Nick Castriati from Trapi. Nick, well done. The Scaleup winner in Europe, Kasia Pankowska. Kasia, congratulations. North America, Seedup winner, Anna Sun. Well done, Anna. Scaleup winner, North America, Annie Sloan from the host company. Annie, well done. Seedup winner, Wildcard division, Marius Negond from I Wander. Well done, Marius. And lastly, the Scaleup winner from the Wildcard division, we've got Woody Sears from Audio. Well done, Woody. All right, let's have all those winners turn on your camera and do a quick wave to the crowd. Walter will take a screenshot once everybody's on, and we'll put you on the big screen. So congratulations to you all. Very well done. We look forward to seeing you in Singapore and in Arizona in November. All right, cameras off. Okay, so thanks everyone for attending, judging, and pitching. We know it's a labor of love, and for all of you to be here today. So thanks for your commitment, your enthusiasm, and support of innovation and travel. The winners will see you in October at WIT Singapore. We invite everybody to join us in October at WIT Singapore for the GSP Showcase. And then the winner of the People's Choice will move on to the Phocuswright Conference in November. Be on the lookout for our announcement of the 2025 Hot 25 Travel Startups this November on Phocuswire. Hard to believe, but this is our 7th year for this list, which is a collaborative effort between Phocuswright's research team and the Phocuswire editorial team. Phocuswright's travel startup database has been the source for the selection for this list since the beginning. Speaking of startups database, Phocuswright's interactive travel startup database is the best place for startups to do competitive research and for investors and corporates to understand trends. It's like the Crunchbase of travel and contains almost 8,000 companies meticulously tagged in travel industry specific categories. So we're only charging $500 for a year's worth of access. You can find that on our website. And we look forward to seeing you in Singapore and Phoenix. And thanks again for all your support. Have a great day.